Genesis, another digital currency group portfolio company. Full disclosure, DCG also owns CoinDesk.com. What we reported last night, according to sources, is that Genesis, which is a big crypto lender and brokerage, is down bad given its exposure to Three Arrows Capital and Babel Finance. Now, the best we could get was in the hundreds of millions. That's obviously a big range, but according to sources spoken to by Ian Allison and Danny Nelson, Genesis, a crypto lender, is also feeling the pain that other crypto lenders in the market right now are feeling. So this is a bit unsurprising, right? We're getting some details that they do have exposure to 3AC. This was alluded to really by Michael Morrow, the CEO of Genesis, last month. But what we're seeing now is further detail around their exposure and their potential losses when it comes to making loans to the now likely insolvent Three Arrows Capital. Check that. It was earlier this month that Michael Morrow made a tweet about that. So it's interesting to see this come to light based on reporting and sources. Genesis did not comment, but it's really interesting to see that this contagion that we've seen with Three Arrows Capital is slowly trickling across all the big crypto lenders in the space as this hedge fund looked to bring on loan capital to hit a home run that would get them out of the red. And indeed, it didn't work out for them very well. So that is the story there based on reporting. Again, really interesting to see this contagion being spread among the crypto lenders, and Genesis did not dodge the bullet. I'm going to toss this to George for his thoughts on this big Genesis scoop.
Yeah, a couple things here that I had in mind. First, based on the conversations I've had with people at Genesis, I can say that most of these people are traders through and through, and sure, they did lose hundreds of millions of dollars, but expected loss is part of doing business in finance. And if you're a big dog, you're a big dog. And until I see anything to suggest otherwise, I'm going to assume Genesis is still a big dog. It's kind of how, you play the game, right? You're a trader, you're going to make a lot of money. You're going to lose some money on some trades, just how it goes. The other thing is that we're talking about all these lenders, this contagion risk, people lending money to people who are lending money to people who are lending money. It's so eerily similar to what we saw in the great financial crisis in 2007 and 2008, 2009. A lot of these big financial institutions run into trouble when they start lending a lot of money to each other. And I remember, the big cynical man I am when it comes to everything that's not Bitcoin is, okay, so what is DeFi doing? And everyone kept pointing to, oh, I can get flash loans. Oh, I can get a loan without going through a bank. Oh, I can get a loan here. I can get a loan here. It turns out everyone was getting a loan from here and then taking that loan and getting a loan from here and getting a loan from here. And that's a little sketchy. So while this stuff is unwinding, I don't really know who to get angry at or who to blame other than like ourselves, I guess. I don't know. I don't really know. I think Genesis will be fine for the time being. They're just one of the, big players in the space providing loans, but they're decidedly different than, the retail investors in Celsius, say, who are putting their money in there and their money's getting lent out in ways that they don't know. Genesis is a more sophisticated investor than just, the four of us on here. So Jen, anything to add there?
Yeah, they are definitely more sophisticated than the four of us on there. Just the fact that you brought up Celsius. Okay, sorry, Zach. You're more sophisticated than the three of us.
I was saying I was dumb as bricks the other day, so I'm sticking with that. I'm definitely far less sophisticated than the gigabrains doing the actual trades. But back to you.
That's right.
The article referenced deep pocket saviors that are coming in to kind of try and stop this contagion, right? And they referenced Sam Bankman-Fried. And just the fact that you brought up Celsius, there was another article published on CoinDesk, I think 2 hours ago, that said FTX was looking to buy Celsius, but there was a $2 billion hole on their balance sheet. And that's crazy. I mean, during the bull market, we speak to retail investors and we tell them, not to do exactly what we see the institutions doing now. And it's like, we've spent so much time on the show telling people not to FOMO into deals, not to FOMO into things, not to over leverage themselves as individuals. And now we see these massive institutions kind of doing the same thing that we're telling retail investors not to do. And it is sad. And I think people watching should not follow suit. Zach, I'll pass it off to you.
I saw George's hand go up, so it's back down to him.
I have a question. Okay, I have a lot of images that come in my head when I hear the term hole in balance sheet. What does that mean? Is there some poor first year analyst that was trying to balance the balance sheet and they didn't know what to do it, so they just left a balance sheet unbalanced? Or is there literally a physical sheet of paper that has a hole in it and we don't know what that liability line is? What does a hole in a balance sheet even mean? Is there actually that much money unaccounted for and they have an unbalanced balance sheet? Like, who's auditing these people? Anyone know? Does anyone know?
Hey, we didn't report that one. I got no knowledge of what that story is about, so I cannot not speak to that one. But hey, Sandali wants to say something.
Yeah, I mean, someone just recently asked me, is it that these firms were severely unprepared for a bear market, or is it that market is now bigger and there's a lot more money involved, a lot more people watching and taking notice, or is it both? And I mean, as we've been saying, I think it's like a lot of those things. It could also be like mismanagement and just, like lending going out of control, and the market is bigger and more people are watching, and companies should have been preparing to take responsibility for their immense growth during the bull market. And all I can say is like we might see a few more of these stories, and we'll see how various companies kind of navigate through these waters at different degrees. And I think CoinDesk will definitely be there to cover the developments in the cool and very responsible way it has been doing so far. So I'll just plug in to check out the CoinDesk coverage of all these companies and what's been going on lately, which has been nuts. And we've been there on it, asking the right questions. Zach.
Yeah, I mean, we've been doing this with like BlockFi. We had a big scoop on BlockFi over the weekend. We've been following the Voyager story very closely. I feel like the Voyager story is kind of the analog here, right? So Voyager made a big old loan to Three Arrows Capital, something like $600 million, a combination of a lot of Bitcoin and a lot of USDC. And sure enough, Three Arrows Capital wasn't able to satisfy the terms of that loan. So they had to kind of go begging a little bit, and FTX was able to say, okay, here's some capital, make it right. And so I think what we're seeing is people like Sam Bankman-Fried step in. The implication here is that Digital Currency Group itself could step in and help out Genesis should they need it. But to George's original point, and this is suggested in the article, these bets may have been hedged, right? So the ultimate net loss may not be something that is ultimately going to make a huge difference in terms of Genesis operations. But again, they do have that backstop, whether it's in this instance likely DCG, but other firms are finding those backstops elsewhere, people who are in a position to extend that capital in a time of need with some strings attached. It's going to be interesting to see who and if there's a next shoe on this one.